What's going on, everybody? Welcome back to the world's greatest YouTube channel. Today we're looking at Molina Healthcare, that is ticker symbol MOH. The stock is currently trading at $192.79. The daily chart looks like it is trying to recover. Earlier this year in July in the summertime, the stock was trading around $315 and it fell all the way down to around $160. A nice $30 bump from the bottom, but now the bigger picture is, can this stock continue to rebound, or is there more consolidation ahead? So just looking at the daily chart, the 200 SMA is around $265 as of today. As time goes on, that moving average will come down. That is going to be an excellent test once the stock price does try to go up and overcome that resistance. Our weekly chart looks actually kind of strong. Last week's candle was a full-bodied candle, and it looks like so far this week we are heading upwards. So a very strong looking monthly chart. However, very strong looking weekly chart. Our monthly chart looks like absolute devastation. You could see the stock just fall off a cliff, and it is now just barely trying to recover. Great candle for the month of September. However, we could be in a tight range zone for the next several months. What we need to do is, number one, determine the actual stock price of Molina Healthcare. Does it deserve to be at $192? Should it be more or less? Are institutions buying or selling? That is going to have a major impact on if the stock could be heading up or down. And then third, we're going to go ahead and do my favorite, analyze the technicals, look at some support, resistance, Fibonacci arcs. I did take a peek at this one, and there is a decades long channel that is getting very close. So extremely excited to show you that. But for now, we're going to go ahead and hit the like and subscribe button and jump on in. All right, as you can see, we've got a beautiful looking daily chart here where we saw the wreckage and then it's been consolidating now. Again, the low was around 153 and it got as high as 196, 197, and right now it's at 192. Just really quickly before we calculate this stock price, let's just take a quick look here. They do have debt. That it does not look like they are addressing their debt. It is just kind of being stagnant there at the moment. They are profitable. Again, very undervalued here. This is a Warren Buffett-esque type play. Warren Buffett did get into UNH, United Healthcare, which is a very exact. I think UNH triggered all these other healthcare companies to fall in line just like this one. Earnings per share over the past 3 years, positive. Sales over the past 3 and 5 years, positive. Earnings per share quarter over quarter, negative. So that is something to keep in mind. It looks like insiders are selling and institutions are selling as well, but we'll double check that. Kind of a low float stock here. So really quickly, I love to look at the bigger picture and then whittle our way down. The 200 SMA on the monthly for support is going to be around 132. So that would be nice. A confirmation bounce off the 200 SMA would just give us that much more confidence that, hey, this stock can stay above this 200 simple moving average on the monthly. Perfect. Look how long it respected this 50 SMA as well. Let's just go all the way back. The stock has stayed above the 50 SMA for 13 years. How many years do you think it'll be down below? It's only been 6 months so far. So have patience with a lot of these healthcare stocks. Again, these went up for decades, and now they've only been on a downturn for like a month or two. 6 months or two. 6 months or two. About 6 months. July to October, 3 months, whatever. Okay, we're going to go ahead and calculate now because that is the bread and the butter, which we all love. Their market cap is $10.45 billion. Absolutely awesome. Income, they are profitable, $1.13 billion. Sales are $43.410 billion. Fantastic. Now this cash and the debt part is going to get pretty ugly. Potentially. The debt part more so on the quarterly. Total cash, they've got about $5 billion. 4,499,000,000. Need to take a zero out. 4,499,000,000. Total debt, not that bad. 3,563,000,000. Not bad at all. Okay, we do have a lot of insider selling, but no, a lot of the selling was also before the large markdown. Um, wow, Joseph Zubritsky cashed out. Zubritsky cashed out quite a bit. April 30th. April 30th. This might be a duplicate there. Typically, when stocks are undervalued, companies buy. Like this person, James. James purchased at 155. He was up about $47 per share. So nothing crazy there. We're gonna now determine our potential stock price per share. 54 million. 1, 2, 3. 1, 2, 3. Potential stock price of $1,035. Did I do something wrong? 54 million shares outstanding. Debt, cash. Did I do something wrong? I don't think I did. Is my calculation off? 55 billion. That is correct. That is correct. So that just goes to show that the stock is heavily undervalued, in my opinion. I don't think $1,000 target price is feasible. Cash, everything was correct. We did get our billions in sales, so yeah, everything was correct here. Even if we remove the market cap, actually not even remove the market cap is what makes this. This stock is severely undervalued. $842 stock if we do not count the market cap, which is crazy. So this stock is severely undervalued. If you're someone who likes the dollar cost average over the long term, this is juicy. This is something you really like. So we cannot argue that from a fundamental standpoint, this stock is undervalued. Institutions and hedge funds, old data shows that they own 99%. New data shows that they own 121%, so 22% more, which is crazy. We do see institutional ownership kind of fading down here. However, institutional ownership is up, so I would not, just based on the volatility we've had over the last few months, I would more so rely on this over this. So institutions and big money are buying. However, the trend is your friend until the end. And I have charted this one out before. And I did chart this out before November of 2022. So it's been a couple years, but the last Fibonacci arc I had was ending here on October of 2022. And you can see that it captured this movement absolutely perfectly. So ideally, what I would want to see, and this goes against the fundamental value that we just saw, look at how close this stock is to getting back into this 2-decade-old range. That would just be absolute confirmation. I think even just bouncing off the top exists, showing that this decades-long channel exists, would be huge. I think this is a snap buy opportunity between $95 and $140. A snap buy. Because I think what we'll see happen is we're going to be in a bear flag. And it's going to be a tight bear flag. Right there. So what that means, and I'm just going to activate this really quick. What that means, a bear flag is we have our flagpole. Think of our flagpole as this long red candle, and our flag is right here. The stock is going to ping pong between here and then fall down in this range. So it should fall. We could probably go as high as, we'll just go as high as here. The stock will trade within this blue range here and then likely fall through. And that is not a company bad PR. That is just a technical move. This stock is undervalued. We can see it with both of our eyes. Think of GameStop when the stock was like two, three, four, five, six, $7, and it became extremely overvalued and went to $400. That is just pure momentum. And right now we are on the opposite end of that momentum cycle for Molina Healthcare. Molina Healthcare, the momentum is to the downside. And if we're looking at dates, if you're holding me up against the wall and you're telling me to give you a date on when I think Molina Healthcare is going to make a decision, I think the stock will be, I think it'll touch potentially 145 by March of 2026. We're in this diamond right here. We're in this little play right here. The stock is going to have major resistance at $215. The stock is going to test $201 here pretty soon, probably in the next couple months, but 211 is going to be an extremely hard sell. We've got earnings coming up here October 22nd, I believe. Whoops. Where are we at? October 22nd, is that right? Yeah, after market. So, yeah, that's just my 2 cents. I if you're someone who dollar cost average and you have 5, 10 plus years, why not just start dollar cost averaging 10, 20, 30, 40, 50, 100, 200, 5,000, 1,000, whatever dollars over the long term, because you're going to get a better price over the long haul rather just putting 5,000, whatever your lump sum is, putting it in today and then waiting for a year rebound. So, I do also want to share that it took this stock about 12 years from right here. This is January of 2005. The stock did not recover until May of 2013. So 8 years and 4 months it took the stock to recover and get back above water. So I'm not saying that's going to happen in this case because this stock is severely undervalued. But I do want you to understand the gravity that this thing has been going up for decades and we've only been down for 6 months now. The safest thing you could do, there's two really safe things you could do. Number one, if you really want exposure to Molina Healthcare because you love it, you've got a family member or a friend that works there and giving you some good word, maybe look at investing in the S&P 500. The S&P 500 is the top 500 stocks in the US market. Molina Healthcare is part of that. So when Molina Healthcare goes up or down, you'll have exposure to that in the S&P 500. And I think the second best thing you could do is sit on the sidelines for this one. Not because it's a bad deal. It is a great deal. I do not want to argue that point. It is undervalued for sure. However, we've only been going down for months at this point, and the stock has been on a 20 plus year run. So the safest thing you could do, be on the sideline or be in the S&P 500. I'm never, this is all entertainment purposes. I'm always in the S&P 500 no matter what. So that is my 2 cents. Thank you so much if you made it this far. Molina Healthcare, I do see more downside. If it does get down to this purple range here, that's a snap buy. That is like, don't even think about it. Set it, forget it. Dollar cost average heavy there. Boom, boom, boom. Would I do that? Yes, I would. This is something I would consider doing. But it's going to take some time. It's not going to be 2025. So again, thank you so much. Talk to you in the next one. Goodbye. Adios.